Looking into our sales market, buyer activity remains strong, with this week's auction clearance rates showing that of 2,065 auctions held across our capital cities, 75% reported a successful result. This figure is up from last week and even up from the same time last year, which was an auction clearance rate of 71%. Sydney alone demonstrated a clearance rate of 80%. Recent data also indicated a rise in dwelling values across every capital city for the month of November, recording a 0.8% increase, following on from the 2.1% drop experienced in Australian home values between April and September. Increases may not fall evenly amongst differing dwelling types though. Whilst house prices have driven gains in the combined capital cities index of the past 3 months, increasing by 1.1%, capital city unit values fell by 0.6% in the same period. According to CoreLogic, if the current growth trend remains, we are likely to see national house prices return and even go beyond pre-COVID levels in early 2021, largely attributed to easier lending standards and historically low interest rates.
Whilst property prices seem to be gradually on the rise, rental prices remain fairly mixed, with a range of factors creating different results between regions and property types. Looking nationally, the top performing rental market among our capital cities for this year was Perth, which experienced an increase of 8.2% in the year to November, houses leading this figure. The second highest increase was Darwin, with housing and unit rents increasing to 6.3% this year to November. According to CoreLogic, whilst the increase may seem good news for landlords within Perth and Darwin, the reason for the strong rental increase was due to a gradual withdrawal of investors from the market. The rapid rebound in rents could see investment participation bottom out in the residential market through 2021 and then start to climb. ABS housing finance data suggests the investor share of mortgage finance for the purchase of property through September was just 16.2% in Western Australia and 11.6% in the Northern Territory. These are the lowest rates of investor participation of the states and territories.
Meanwhile, Sydney unit rents have been pushed into deep downswing, falling minus 5.4% this year to November. This is partially due to a relatively high supply of unit stock over recent years, with the unit completions across New South Wales peaking at above average amount of 11,566 in December 2018. Demand side factors have also pushed down unit rents. Through COVID-19, the closure of international borders was a shock to rental demand for Sydney and Melbourne, where around 2/3 of net overseas migration to Australia has also concentrated for the past 3 years. This is because the vast majority of recent overseas arrivals are renters. Sydney house rents, though, have demonstrated a 1% increase this year up to November, bringing the overall national house rents up by 3.2%.
Looking at the potential for a big start to 2021 for selling, after a long year that has kept people at home and unable to travel, experts have estimated that Australians have accumulated $110 billion in savings. With the economic devastation experienced in Australia earlier this year continuously improving and the current demand levels we are seeing in the housing market, it is expected that $110 billion that households have saved is likely to be put towards property, and the expectation is that the property market will show no signs of slowing down as we commence 2021. New home loan commitments have reached record highs according to the Australian Bureau of Statistics data, which showed that the total value rose from 0.7% to $22.7 billion in October. Confidence in the Australian housing market has also been flourishing overall as well, with recent consumer survey by Westpac recording a strong surge in November, a 7-year high for the index and easily above pre-COVID levels.
With plenty of forecasts pointing to a rise in property prices, many hungry buyers will be out looking to get their foot in the door before they miss out. If you want to take advantage of current conditions, or if you're just looking for some advice on what to do in a busy market, reach out to our team so we can help you. Thanks so much for watching, and from our family to yours, we wish you a Merry Christmas and a Happy New Year.